And good afternoon. This is the Elliott Wave Daily Update for the NASDAQ 100 being recorded on Monday, November the 24th at 2:25 p.m. Pacific Standard Time. Now, I'm going to start here on the daily, and I have marked Minute Wave 4 as complete. And I talked about it this morning, and just starting on the daily, just to kind of show you that the wave 4 I'm putting there. The previous fourth wave is here, so it exceeded it by a little bit. But I imagine if I'd have drawn the 382, it would not have even reached 0.236, as a matter of fact. But it did come in close enough to the fourth wave of one lesser degree, and that would have been right there. So that all fits, and I kind of put in. Now, here's what else I did. I'm going to drop it back down to that hourly chart. Actually, I'll put it on the 30-day hourly chart. It's a little bit cleaner. And I'm trying to just, it was suggested to me, I think on both the NASDAQ and the S&P, to take a look at WXYZ. So it's WXYXZ is actually how it gets labeled. But that particular pattern, and I get it because this pattern on the way down was giving some, I don't know what I want to call it, but difficulty in terms of like what exactly is the market attempting to do and what's it telling me. So I went ahead and I thought, okay, I'm going to try to learn this. I have the gist of what it is. In terms of Elliott, when going back to the original works, I think in WXYZ, it's in the same vein as a double ABC or a triple ABC. And so in this case, it would be in a double because we're marking that as a Z. But in any case, I'm going to try and mark it this way. Now, I am inviting those not to be, hey, you jerk, what are you doing? That's go stupid. But those that have a little proficiency in WXYXZ to come in and comment and say, did I put it on correctly? Does it look correct? And is it something that I can just start to build with? Because I think we're going to get many of these. I think we can go back and we still can find them at different places. And I am using them in other things, particularly like in silver. My largest degree that I'm counting, it's a WX, and we're in the Y wave, which happens to be going up, but still we're in a Y wave. And so I am using it. But I just want to see about using it in this particular fashion. Am I correct? I believe I am. All right, so WXY putting the minute wave 4 down there at Friday's lows, and a little bit different here. I'm going to bring it down quickly to the 15 minutes so I can show you where right here at that bottom. Because what we have is 1, 2, and I can get a 3 and a 4 and a 5, and I could say 1 and I can say 2. And then 1, 2, 3, 4, 5, 3, and then a 4, and then we get the 5 in the extended form. So they put it there, and then I have an A, B, and a C for a wave 2. Actually, 1, A, B, C, 2. So if that's 3, 4, 1 of 5, 2 of 5, and then we get the 3, which I think took us up to here. Maybe there, but I'm going to put it there. And then we get a quick 5. Now, is 5 done? Well, becomes anybody's guess, to be honest with you, because I think I can count it as complete. But I'm going to allow, let's see what happens when Globex opens. And we might be opening at 25.45 or higher, in which case, then yes, the wave 1 would walk up with it, because what I'm going to label this as is minuet wave 1 of minute wave 5. See, there's the 4. Let me just get these a little bit closer. Come on, take it. Put that right there and get this up there. So just to kind of keep them where we can keep them in sight. So minute wave 4, and so it's going to be minuet wave 1 of minute wave 5. Now, I have these markers are actually for minute wave 5, But I'm not anticipating that 0.382 or 50% is going to complete wave five. I'm leaving them there because they will be resistance levels on the way up. They're Fibonacci levels. They will likely provide some resistance. And maybe 382 is going to be the resistance that will complete minuet wave one of minute wave five. And then we get a wave two, which could actually bring us back kind of far. So just to show you what I would do if that being the case, if this whole thing is going to be wave one, then I go from here. No, that's not the right one. Let's try that again. Let's go there. I'm going to go here, take it up to here, and they're just straight retracements. And so what we would have is 0.236 at 24,741. 0.382, most common for a wave two, actually 3.82, 50%, 62%. And that's 24,580 down to 24,322. So 581, 322. And it's kind of a decent range, and it can come all the way back in a wave two. Now, here's the other things, like as many people ask for, and it is my tendency to put out a preferred count and an alternate count. And right now I'm just thinking to myself, what would my alternate be? The only one that would suggest as an alternate right now would be something that would indicate that the high here completed everything all the way up to that primary wave three. And the same thing would have to be happening in the S&P and in the Dow and everything else. All would kind of have to come in right there. And the only one that I think I can continue to do that on is the Dow. So here in our weighted index, our cap weighted indexes, which are I believe the Russell, the NASDAQ, and the S&P, the alternate would be that this is the top. And this is the beginning of a longer or a prolonged primary fourth wave correction. And I've gone over that in the podcast and some other updates. I don't really want to do that now because I'm not marking that there, but I don't see another way to extend this fourth wave out yet again. So possibly someone's going to say, oh yeah, you can, and here's how. And that would be fine. I'm open to listen because right now I'm wrapping myself around the WXYZ, and thinking that did complete the four. And as I told you, came within, as far as like the previous fourth wave, it exceeded it just by a little bit, not a lot. And so everything kind of lines up to go ahead and put that there. And today's launch did as I was looking for to give a little bit more support to the fact that wave four is done. And that would be that getting above volatility triggers, which we did in the Qs, which we did in the spiders, which we did in the NASDAQ, and I believe also in the S&P. So everybody got above their volatility trigger. Pretty much when that occurred, we started to see risk-on trades coming in. And then they got a little bit pretty heavy, to be honest with you. And I'm going to take this off because we're not absolutely 100% sure. But you can see what I did. I just went down to the low of 4 and put up a retracement up to that high. And you'll get your levels for what the wave 2 should be able to come into. Now, again, this was risk-on trading. So, and again, what I want to say is you can see it. When you recognize it in terms, you see that the volatility is starting to get hit. You're seeing that the buyers are just kind of continuing to show up and they're pushing against the market and they're moving it higher. Often, that's pretty much how it does start. But then once we got above the volatility trigger, it just kind of kept going up and all the pullbacks then became rather muted. You know, it took some time and it kind of waffled around, but it didn't really come flying back down. excuse me, just kind of stayed higher. So we're going to look for that possibility. We get a little bit more that takes up 25,045. It would be one area that'd be nice. Above that, we have resistance up at 25,003, 10. And then again, the 50% marker at 25,402, 400 to 405, we'll call it. And again, that would be just kind of finishing up this first wave. Beyond that, I think we will finish it. We need to come down and start a third. And I think the third then cruises up past this. But this is just a marker for that level as well. And it could just, we're going to see how it also blends within the count as to what kind of coming to a completion or what a turning point may happen there via a small corrective wave. So a lot of things can kind of go on. That's why I'm leaving those up there. Now, I didn't put on the 0.764 because I think once we break that, new highs should be next. And so once we start doing that, wave 5 would be equal to wave 1, our first marker, at 26,911 or 26,912. Beyond that, our next marker is 28,778. That's where wave 5 would be 1.618 times the length of wave 1. I think I may have, I didn't. We have additional above all of that because I can definitely come this way, go over here and just tick the next two. All right. So these are just fibs, folks. They're not indications of where the market could go. They're indications of Fibonacci levels that take us to the moon. So in essence, I'm just going to step out for a quick second out to this. We're in that minor wave 5. Okay, so that line that you're seeing, let me go back down here. The line we're seeing way above there, that's minor 5 because minor 5 has already gone through 1.618, 2.618, 4.326. And so the next one up is 6.684 or 6.845. So that's way up here with 2.618 for the minute level. So, oh, okay, we're getting a match up there, which is the math coming together for that fifth wave and for the minor fifth wave. So when I start to see that, I'm like, well, okay, that adds another layer to that possibility. Now that's 31,000. I mean, here we are heading into the year end, heading into what just about everyone is going like, we're reaching a top and we should be correcting. Now, this may overflow or we might start to correct, but then come back and finish with a good boost higher right there at the end of December. I'm not necessarily looking for 31,000. I am, however, thinking that at least 26. That is where wave 5 is equal to wave 1. And again, that wave 1 was in response. It's here hidden in this. There's where it started. Actually, here's where it started. And did I? Yeah, I did. Good. This is where wave 1 began. And this is where it finished, actually there. And it was huge. It was huge because of this rally, which was, I think it might be a good time to buy. I'm direct quoting someone. And that I'm going to put a pause on those tariffs that we're going to slap on China. That was back in April of this year. So that's wave 1, a large move. So to put it there, yep, 26. It was big. So that's our first true fib level, in my opinion, that could finish the whole up to primary 3. All right, so back down, just to kind of recap. Important what happened today is breaking above the volatility trigger in the Qs and in the NQ. So all of the NASDAQ 100 managed to get above the volatility trigger. And I believe the next one up as well, like it did in the S&P. Give me 1 second while I go over and double check. In the NQ, volatility trigger was 24,543. So yes, we actually did, and also in the NDX, that would be good as well. So across the board, volatility trigger, and also we popped above and kept going, large gamma 1. And so what we have above all this is above 25,000. So kind of getting up into there. So again, I think we need to put in, we might get up to here, put in a wave 2, correction, and then start a wave 3, which I believe takes us past that. And likely we start retesting those highs, 26,000. And it's happening very fast because it becomes very funny because people are like, well, why is the market going to go up? It's like, wow, they're going to come up with a lot of reasons, but I am more convinced that it's all a factor of gamma. It's all a factor of options trading. It's all a factor of doing the math. And so to me, to put a fundamental reason why the market should go up and create another new all-time high when we're kind of looking at some not so nice things that could possibly be happening soon. So, but here we are. So I intend to trade it. There were some good trades today, and it was like, yeah, just jump on board and ride. Anyway, the only negative that could be, again, or an alternate, is that the top is in. All that primary 3 is back here, not here anymore. I'd have to move it back to here. So, and then what would come down is 1, 2, 1, 2, 1, 2. That would be pretty weird. And then what's this 3? And then what's that? See? So again, that's why this doesn't count as well, to try to figure out, okay, how are we coming off? I mean, it truly, truly is the bouncing ball. So that, and as we talked during the whole time it was doing it, it was due to option, due to gamma, due to breaking volatility triggers and put walls. And algorithms just going like, well, sorry, we got to go down to here because we got to cover, we got to adjust. We're doing whatever we're doing. So whether it's a search and destroy mission, which what I call some of the algorithms, some of the programs that they run, they're just search and destroy. They're searching for premium or gamma or something, but they just get it and they destroy it and move. That's kind of interesting, but it does happen. And it produces a lot of trades if we can step away from having to attach it to something fundamental. Fundamental is going to happen no matter what. All right. I'm kind of going to wrap it up right there. So let's see what happens. I do think we're well on our way. What's also, one last thought, what's also going to keep great, strong support is if this risk on trade can carry us into December, up to like the 10th of December, 10th to the 15th. Now, if I had to look for when that December expiration is, it's on the 19th, and then we have the 31st, of course, which is the year end. And that one ought to be a joy. So I can't say that this all doesn't just continue to push gamma-wise and strike price-wise and index level-wise right through the end of the year. Because that's what's going to happen, because that's where a lot of traders may want it. That's where they're going to try to push it, and all they got to do is push the buttons and get it going. Okay, so leaving that all aside, tomorrow's another day, and I want to be trading it. Okay, so next update will be tomorrow morning.